Hello and welcome to Policy and Politics with me, Tarun Nangia. Two articles piqued our interest last week. An article in Business Standard that spoke of Finance Minister Arun Jaitley saying that the budget content will be decided by economic realities. And an article published in Reuters highlighting how Prime Minister Narendra Modi-led government is in favor of an expansionary economic policy and does not consider the government's plan to keep the fiscal deficit of GDP at 3.3% as sacrosanct. This article shows that there is going to be a sea of change in the way this government looks at policies, schemes, tax breaks and incentives. To know more about the government's new economic thought, I have with me Gopal Agarwal. He is a qualified chartered accountant, director on the board of Bank of Baroda, and chief spokesperson economic affairs of the Bharatiya Janata Party. Mr. Gopal Agarwal, welcome for sparing your time for our show.
Namaskar.
Opening comments on this change in the way you look at how the economic realities of India and the government's way to look at them are going to be seen in the coming days.
I would like to mention, it's important that you have mentioned that Mr. Jaitley said that the fiscal discipline is at the very best after 4.5 years. The government has focused on good macroeconomic parameters, whether it is inflation, whether it is GDP growth rate. All have seen a very healthy growth over this 4.5 years of our government. And even the current account deficit and this fiscal deficit all are in the healthy state. That, as mentioned, that we have achieved a target of 3.5. So what we would like to say is, then second important issue is when Mr. Jaitley says that we have to form economic policies at seeing the ground realities, which are the sectors that need the hand-holding from the government. That's very important. Where the economic growth is required, where government need to catalyze economic growth, those are important areas have to be looked after. And what I would like to mention is that we are not chasing some macroeconomic parameters. As an economy, as a large nation of 130 crore population and one of the sixth fastest growing economy in the world and 10th largest, the fastest reforming economy for the second consecutive years. So what we think is that we don't need to just chase macroeconomic parameters. We have to look after how the economy will grow. And those economic growth requirement show that there are 2-3 sectors which require hand-holding from the government. One is the important agriculture sector, which needs support from the government. Then MSME sector is also an important sector which is a channel for growth for the economy. These two sectors require some support. Then the whole overall economy also requires some liquidity, demand creation, so that private investments can come into the economy. And private investment will never come unless there is a demand created in the economy. Demand can be created from liquidity. One factor is that the government spending is an important driver of creating demand. Government has been spending a lot on infrastructure, various projects, etc. We need private investment. So, in a conclusion, what we think is that there are 3 important areas which require strong support from the government. Macroeconomic, these are agriculture, these are MSME sector, then liquidity in the sector. And the other thing which are in support of the economy is that inflation is quite under control. So with inflation under control and fiscal deficit under control in a good shape, we think there is a space for expansionary economic policy that the general economists are talking. And I think that's what can be done for creating demand in the economy.
So if I take you back 2 months back, we could see and sense the change in the way government looks at things when there was a tiff with the Reserve Bank of India, where the government primarily said that The TIF is because it wants the interests of small businesses secured. That's why it wants loans to be, that credit flow to small and medium enterprises should see a marked improvement, as the government felt that they are not getting the funds that they require, and this will hurt the economy in the long term and the short term also. What kind of measures do you think the government has taken and will take for small businessmen and farmers, and what can we look forward to in the coming months?
I think you have flagged off an important issue is that government has already said at several point of time that the RBI should look for credit offtake. Credit growth is an important area through which investment can be driven in the economy. Private investment will come when there is a lowering of the interest rate. And RBI had been focusing on inflation control. With inflation at 2.19, level of 2.19, there is, I think, a scope for reduction of interest rate also. And RBI is responding to many of the requirements of the economy, some of the issues which the government has red flagged with the RBI. With regard to liquidity and credit for the NBFC sector, they have already relaxed those norms. Some distress was there in MSME sector with regard to IBC loan structuring. That also relaxation has been given by the RBI. So I think with the banking sector now in good shape, all the NPA being recognized, acknowledged, provisioning been made. Now government is also capitalizing some of the weak banks, and there is a proposal for that has already come, that proposal of merging Bank of Baroda, Vijay Bank and Dena Bank is already has been approved by the government. So I think the banking sector is now in good shape. The RBI is on line with what the government thinking is with regard to credit offtake and liquidity, credit availability to the NBFC, MSME sector. Restructuring also is taking place. So I think there is a strong need now to reduce interest rate and in monetary policy. That is one thing which RBI can do to improve the economy.
So I mean, you feel, I mean, for the middle class person, the most simple thing is if your credit rate is easier, he buys more houses.
Yes.
So your construction industry goes up.
Yes.
And the construction industry, as we all know in this country, has been facing the problem of financing.
Yes.
NBFCs are in bad shape, that's why. Do you think this all changing in the next 3 to 4 quarters?
I think in the monetary policy, government has also said, RBI also think, so there is a very strong chance that the interest rate maybe there should be some relaxation on the interest rate, because industry also is facing some kind of requirement of lowering of the interest rate. Okay. That is also there. What I would like to say is, with inflation and fiscal deficit both in good shape, the government can look into expansionary economic policy, because whenever there is a relaxation in the fiscal deficit, there is generally the concern is that it will lead to inflationary pressures.
Right.
On the economy. So there is a scope on that side also, with inflation under quite check. So in this budget recently, we can see some news for the tackling of some of the concerns of some sectors.
I've read many articles in the recent time quoting sources in this government that the government expects the Reserve Bank of India to agree to a transfer of interim dividend of say about $5 to $6 billion in that range. How will that help the government? Times?
I think the finance minister has clarified that we are not looking for the capital from the RBI for meeting our fiscal deficit.
No dividend also.
Dividend is regularly every time
but
RBI
it was
is giving.
Less, I think, comparatively in the past.
It can be seen depending upon the profitability of the RBI. But now the finance ministry and the RBI set up one committee to look into the restructuring and the capital structuring requirement of the RBI. That will finally take the call. What is the reserve that has to be maintained with the RBI? What is the capital? How much?
Report will
yes.
Come
so
out.
Once that, I think a government will not interfere in that committee. committee report, when whatever recommendations are coming from that committee with regard to dividend distribution or with regard to capital restructuring, that will be seen by the government.
Now that as we see are sitting in the fifth year of this government, any comments on the performance and the expectations that you have? The performance, are you happy? What are the expectations? Where you think that you should have done more?
No, I think we should look into data. Data is very important. When you are talking of macroeconomic parameters, we should also look into comparative data. So if you see what was the GDP rate since 1991 was the way where we consider that the strong economic reforms took place. That time I would like, Prime Minister has also quoted this data. The GDP growth rate was 5.1% and inflation was at 10.2%. That was the level of inflation and the rate of growth, which even when we say that there was a golden year of within the UPA, a good 2004 to 2009, the GDP growth rate was only average to 6.9 and inflation was also very high to 6.1%. And in the second term of UPA, the GDP remained at 6.7%, but the inflation rose to 10.3%. So for a common man, inflation is very important. If the inflation is at a double-digit figure, they cannot, whatever their savings, they lose their savings, and there is a very strong push for prices, etc., of food commodities and vegetables, etc., shoot up. The RBI has to go for increase in the interest rate. So from there, now the inflation at present has come down to average of 4.8%, which is at present at 2.19%. And GDP growth rate is quite healthy with 7.3. So if you compare Narasimha Rao government, UPA 1-2 and current Modi regime, we see that the GDP has growth rate in the GDP has improved a lot. Inflation has reduced a lot. There is high reserves. So if you only go by economic parameters, you will see there is a marked change in how Narendra Modi government is performing in comparison to economist prime minister that we call Shri Manmohan Singh ji.
I want your comment on this. There is a bit of worry among economists who say that weak consumer spending and the farm sector has not exactly been doing well. As we could have seen, the loan waivers and all are happening because there is a market for people who feel that they can give a waiver because farmers are not doing well. Otherwise, farmers won't call for a waiver. Can that be a drag on the economic growth and give headache to the Prime Minister?
No, I don't think Prime Minister has said that there is this agriculture sector requires some strong support. Though our government has done a lot with regard to neem coated urea, giving MSP of 1.5% their cost of production, which was recommended by MS Swaminathan in 2006. Then there is insurance, lot of changes in the insurance, farm insurance, which has been linked to the Jan Dhan account. Money is being transferred directly to their bank accounts, and Fasal Bima Yojana, the premium is being it has reduced to 2 and 3% only. The farmers have to pay a very low level of insurance premium. Then e-mandis have been set up. So under the GST, government has tried to create one market across India. Any farmer which is producing in any part of the country can sell his produce to any other region or the state under the GST. That free mobility of commodities also there. In addition to that, still the farmer's condition is not very conducive to the current situation. So they need some more support, hand-holding. There are various options that the government has been looking into, but Prime Minister has said that a farm loan waiver at a national level is not that which our government is looking for. We have given it a free hand to the states. If their fiscal discipline or fiscal prudence, there is a scope for that, then they can go for loan waiver. We are not against loan waiver per se, but it is for the states to decide depending upon their own budget.
On this note, we'll take a short break, but after the break, we'll discuss some reports by the Center for Monitoring Indian Economy, as well as has the insurance for the farm sector exactly worked as the government intended it to work. So we'll take comments from Gopal Agarwal on this, but after the break. Welcome back. Now we ask Gopal Agarwal on the claims made by the Center for Monitoring Indian Economy. The Center for Monitoring Indian Economy has said that India lost 11 million jobs last year, which is about 1.1 crore jobs, with 83% of those jobs in rural areas predominantly, because operational costs for small businesses went much higher than these people could afford. That also they link to the ban of currency notes, which is demonetization, because they were used to doing business a certain way, and that was a sudden attack on the way they did business, and that's why they collapsed. Do you think that remains a worry to the job generation targets of the government? Because this is a big, as you can say, ditch that has been dug, that has to be filled up, and then more jobs, because what has been lost has to be gained, and then more jobs have to be created. Do you think that's a worry area for you?
No, creation of job is a challenge always for the government, because we have a large population of youth entering the job market every month, around 10 lakh it is said average, and creating jobs for that large number of people in the organized sector, particularly government jobs and only big industries, etc., is not possible for any government. And there is some sort of narration or mindset among many of the people that it is only the government job which is good, otherwise other jobs are not that lucrative for them. But I think that narration has to be changed. We have been trying at one hand that entrepreneurship, self-employment, skilling, etc. are important part of creating job market. They have to be incorporated into the overall data for the job, and that has been pointed out many times by the Prime Minister himself, and we have also been talking that the job data in India is not at all comprehensive, and it is mostly on a survey basis. And when you are talking of CMI data also, it is all a survey basis, and therefore you cannot rely completely.
You don't think it's 100% reliable?
It is completely not reliable. It's a survey based, it's a sample based survey, and that cannot tell at a national level what happens, because they are completely ignoring but some of the government schemes like Mudra loan, etc.
I want you to take a 30,000 feet view. When you took charge of this government, the big headache of NPAs was there. Some said it's 8 lakh crores, some states it was 10 lakh crores. You've said it was possibly much more. Then what followed was demonetization. Then the government immediately dived into GST launch. So first NPA problem was there, so big corporates were affected and their vendors, the small companies, were affected. Then you had the demonetization and then GST. Do you think the quick succession of these problems which you had then resulted into what all we see now? Do you think that is partly responsible?
No, definitely one can say that so many reforms have been squeezed in a time frame which is much less than what normally a country like India should go. But then, as the democracy works, we have 5 years term where we have to fulfill our promises and go with a report card for the next election. But so sometimes we have to squeeze them in the available time. But what on demonetization, I would definitely like to say, you asked the question, demonetization problem, whoever is talking about the liquidity crunch that resulted in cash withdrawal of 86% of cash withdrawal by the government. But that was only for 3 months. It was a so temporary withdrawal after a first quarter after demonetization. Right. By January end, the liquidity was restored. At present, the liquidity is almost 99.5% of liquidity has been restored. So liquidity crunch, cash crunch, cannot at present be a cause of worry about the industry or businesses. The liquidity is, there is sufficient liquidity into the system. the issue of GST, if you link it to the worry about the industry or business houses, I think that's a it's an important achievement on the where ease of doing business improvement has taken place, because important thing in the ease of doing business consideration is how tax tax are paid, how returns are filed, how assessment are done, how you get refund. Under the GST, it is all online. So at an initial period, there may be some implementational problem, but it is
now
for the
I want to ask
benefit
you middle class man's question, and a lot of our viewers would want to know from you this, that when you were campaigning for the 2014 elections, there was a huge campaign and many leaders spoke of this, that the basic tax exemption should be at least 5 lakh rupees. So every budget, the middle class was listening to the finance minister for the past 4 years, ki, okay, this budget will get that relief. Do you think there is a ray of hope that being included now?
There is a strong demand, but I would like to mention is that when we came to power, it was 2.5 lakh was the exemption limit for the basic exemption limit. We have increased it to 3 lakh. Then there is an increase in the ATC also, that that has been increased by from 1 lakh to 1.5 lakh. So almost 4.5 lakh crores exemption. If somebody invests into 1.5 lakh annual saving is there, then there is no taxation with regard to around he can save taxation on 4.5 lakh. Even at the basic limit also, it was up to 10 lakh. The taxation was slab was 10%. We have reduced it from 10 lakh to 5 lakh and a slab of 5%. So there also a person gets a benefit. So almost we have whatever we had promised, we have been able to deliver it. But still basic limit of 2.5 lakh can be increased if the government thinks and resources are there. But I don't think it's more of a resource constraint, because 90 major resource from the taxation does not come from the lower strata of the population. It is more of a compliance and a transparency.
We are running out of time. So as usual, Mr. Agarwal spoke to us in a very calm and composed manner and put forth his point as he always does. But we would like to thank him for sparing his time for today's episode of Policy and Politics. Thank you so much, viewers, for joining us today. Thank you.
Thank you.